Greetings, Dr. Jeffrey Scott, and this is my Market MRI Pro update for Wednesday, February 18th, 2026. Sorry I didn't put one out last night. I mentioned over the weekend that I'd be traveling, and I did one Monday night from LA, a little add on to what I had done on Friday. And then just Tuesday, I had a red eye home, and it's not really a great place at LAX to sit and bother people and do a video. So here we go. Busy a couple days coming up. I'll have a Metastock presentation on Friday. I'm going to do a walkthrough of the platform on let's see, on Sunday. I'll mention this in a couple of minutes. Today was really bizarre. Um, Pre-markets look strong. I had a great day. I mean, one of the stocks that I own had I think it was up 42% today, a biotech that I have a lot of shares. So that was a happy day. Um, and then I was sitting relaxing after I got home and did some of my day job. And I looked at my portfolio and it had given up most of its gains. And I was like, what happened? And then the market rallied into the end of the day. So I went and I looked at the timing, and it basically it was the Fed minutes disappointed the bulls. And if you go back and you take a look, for the first time in a long time, you had some dissents talking about perhaps rates could go higher. So I think inflation remains to be the big issue. They were pretty comfortable about growth and jobs, but concerned about will inflation continue to weaken. And that did not please the bulls. Unfortunately, markets did rally back and recapture some of their gains, and we'll take a look at it. Again, my name is Dr. Jeffrey Scott, marketmripro at gmail.com. Google Group's called Top Down Trader. My website's marketmripro.com. I'm neither a bull nor a bear. I'm a realist, and I want to play the market the way the market is going. And I will raise and lower the amount of cash that I have in my trading account based upon my conviction on the market direction. This is for educational purposes only. Anything I talk about is in the spirit of education, not investment advice. The intent of this and all my videos is to demonstrate how I use the tools for top-down analysis and how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock I mention. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I've got tools in multiple platforms. My Google group is called Top Down Trader. I mean, it's nothing special. It's where I post a notice every time I place a video. Um, when I do the session on Sunday, if I cross lines that I don't want to put out publicly, which I do frequently, I just send it out to the members of the Top Down Trader group. If I'm going to do an impromptu live session, that is my mailing list. And the best thing about the Google groups is you have to sign up yourself and you can control when you leave. So I'm not going to be sitting here spamming you. And if I am, just leave the group. So love to have you join. It's free. And you get an extra $100 off my tool if you're a member. And when I do go back to a more interactive forum, those members that are currently or who are in Top Down group at that time, I'll just port over at no charge, and I'll probably go back to Discord at some point. Know your news and earnings. So today the whammy was at 2 o'clock when we got the Fed's January FOMC meeting. Tomorrow I'll be looking at the jobless claims. I think they still matter. I'll be looking at the Philadelphia Fed Manufacturing Survey. When I talk about it on the weekend, I say that recessions don't usually start until it gets minus 20, and it was positive last month. We got a Fed head in the afternoon and the leading economic, and excuse me, before the market opens, and then we got the leading economic indexes for December. And then on Friday, we got a lot of stuff. We've got the December GDP, personal income, and we know how much the Fed likes the PCE complex. If you look at the, so that's delayed, I assume, since we're now looking at some of it might be delayed because I've got see some November and I see some December here, but it doesn't say delayed here, so perhaps it's not delayed. Well, that's going to be important information anyway we look at it. And I'm using MarketWatch as my source. You go to marketwatch.com, look up the economic calendar, and it's free to take a look at whenever you want. Um, I haven't looked at earnings since right after the market closed, or right after the futures market opened, rather, it's at 6. So just so I have a basis, Bitcoin up 395 points, so nothing. Dow up 22, nothing. Nasdaq up 26. S&P up 4.25. Gold down close to 20, and the Russell's down a little bit over 1 point. So I would say futures are marginally higher, but really pretty flat, all things considered. But I guess if I'm still long stocks, which I am, I'd rather the futures be positive than negative. So here's some earnings after hours. RELY up 18.3%. FIG up 15.3. HLF up 14.9. DoorDash, I guess they don't care that I use Uber Eats, up 14.3. NP up 10.3. eBay, they must like it because I'm selling a bunch of computers right now, up 7.4%. I'm sure that mattered, not. And then DEI up 5% on insider purchases. To the downside, one company who I've never understood their valuation, Carvana, down 15.3. CAR, C-A-R, down 12.4. TBI down 7.1, TAP 6.5, and BTG 6.5. So earnings kind of go the way, you got to beat the earnings and raise guidance if you want to escape scot-free, so to speak. Um, and if you don't, you've got to be prepared for the market to do what it's doing these days, which is sell off. Speaking of selling off, bookings, which it's hard to feel too bad for bookings. It was up 3.14% or about 130 points during the day, selling off 2%. Excuse me, selling off $1.99, 0.05% after hours. So relatively flat, I would say. All right, judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. The good news is we're getting close to the massive week of earnings. I did have a Valentine's Day special that is over at midnight on February 22nd, going into the 23rd. The regular price is $26.95, annuals $4.95, starting year 2. As a thank you to those that have been signing up for all these webinars I'm doing and support me, I dropped it for a sale price of $19.95. And I brought back a fan favorite, which is the more things you've done with me, the better price you're going to get. So if you just go sign up for Top Down Trader, that gets you $100 off that price. If you own my premium tools in Metastock or TradeStation or bought my add-on and wealth charts, you get $200 for each one that you own. So theoretically, I have somebody who could buy it for $12.95. I don't always keep those extra discounts. I thought I would do it in the beginning of the year as a big thank you. If you're interested, email me at marketmripro@gmail.com. I'll ask for verification if I don't have the record. I don't have the records on wealth charts, for example. And then I'll send you a payment link based upon the price. I'll talk about the Jumpstart in a second. I did a mentoring session and my favorite option strategies in January, so I'll get you those when you sign up. And then you also get to be part of my quarterly mentoring events. 2 live presentations. Friday, I'm speaking at the Metastock Traders Conference. Um, I'll be demoing my add-on in Metastock and how I use it. And on Sunday, I'm going to do sort of an open house from 11 to 1. I'm going to do it to show the new purchasers how I use the platform. It's late notice, and maybe nobody shows up, but I'll record it anyways. But if there are people that show up, you'll be able to ask me any questions you want. The link to both of these will be in the remarks section below the video on YouTube or in the Top Down Trader email. For more information about anything I talk about, marketmripro@gmail.com and coding at marketmripro if you're having any issues with the program. All right, so it was a good finish, but it could have been better. Qs were up 0.75. They were up almost double that, finishing in the middle of the range. The dollar traded at the high of the range, closed up 0.63%. Spider was up 0.5%, again halfway down from where it was at 0.92. Russell finished at 0.36. This is really disappointing because it was up 1.47. The diamonds were up 0.23 versus a high of 0.7. Volatility was relatively flat. It was all over the place, up 1.45% and down 2.26. And Bitcoin on the day was down another 2%. And if we look at the 5-day change, down 3.67. The new highs minus new lows at 52 weeks or 12 months on the NYSE remain triple digit. That's strong, but we're barely positive on the NASDAQ. And I'd rather be barely positive than negative, and I think we were negative the last time I looked. Participation wasn't bad. 57% of the stocks in the S&P 1500 were up, 54% in the NASDAQ, and 56% in the NYSE. And if you look at the number or percentage of sectors and industry groups up in each index, they were improved versus the prior day. Looking at the S&P 500 sectors, leadership was energy 1.9, tech was up about 1%, discretionary 0.84, finances up 0.75. We flip to the downside, utilities minus 1.68, real estate minus 1.37, staples minus 0.2. That feels like a risk on market, and the defensive sectors, which had been rotating in, pulled back while we saw some of the beaten up things like technology, which has been down over 1% the last 5 days, discretionary the same, and financials, which has been down 1.79, all rallied today. So rotation, rotation, rotation. Is our rotation out of tech and the mags over, and are we going to go on to new highs? Was this a one-day wonder before we continue to rotate to smaller cap stocks and the big caps pull us to further lows? Soon to be found out. If we look at themes, uranium, silver, gold, God, it feels like a couple weeks ago, copper at the top, e-commerce, lithium battery technology, oil exploration, clean tech, metals and mining, millennial, discretionary, fintech, all things that were leaders. And we just flipped to look at what the laggards were, data centers, which is surprising because some of the things that I own, some of the memory plays were actually up today despite some what I thought might have caused a sell-off in SanDisk, and we'll take a look at that one. Cannabis down 2%, robots down a bit, cyber, renewable energy, and home construction all lagged today. If we go into the timing briefing, I don't think we'll see any change. If we just look at the timing model, we are still in a sell on the spiders. To the right of the spiders are the Qs. Down here are the Russell, are all in a sell, while we're in a buy on the diamonds. I was hoping that we'd actually flip at least one of these today, and if you look at the Russell, it's above the WMA, so it's not far from a flip. The bongo would have to change. It wasn't a bad day when you look here, just no changes in the timing model. And the weekly model is really maintaining all of them except for the Q are in a buy, the Q's in a weekly sell, trying to get back above the WMA. So to me, it means probably a weak bull, which means I raise a little bit of cash, but I'm still predominantly long. I have put puts on some of my stock, my mostly option plays, because that's mostly what I do. So, for example, if I have a call that's deep in the money, I could have sold it today on the rally and booked profits, but maybe I want to maximize that call. So what I can do is sell a um, just above the money call, which gives me a little bit more dollars, and use that money to buy an at the money put and pay just a few pennies to lock in my gains and maybe get a little bit of extra. And if the market sells off, I get both the gains on the drop from the put and I get the premium which disappears on the call. I look at the US index ETFs, and we can talk about the option strategies over the weekend meetings. The S&P 500 pulled down, and really for a couple of days here was mingling with the 100-day moving average, and it has bounced. It is still below the 50 and the 21-day EMA and the 7-day SMA, and we'll see what happens. And the concern now is we've now passed the 17th, and as I was talking about, seasonality turns negative here. So I think that technicals trump seasonality. I think that the technicals here look improving. So we'll see. I'm not writing it off because the seasonality is negative. If we look next at the Qs, not as pretty. All right, you're still below the 100. The 17 is crossed here below the 50. Also negative seasonality, a little bit further to go. If you think back at the spiders, they're really, um, I think I put them in a sort of a Darvis box in one of the other charts. They're kind of going sideways and they're in a range and they're just bouncing back towards the top of the range, right off the highs versus more of a breakdown on the Qs. If we take a look at the diamonds, holding above the 17 and the 21-day EMA, seasonality not our friend, but still looks pretty darn strong. The Russell had a decent day, seeing negative seasonality, also above the 17 simple and the 21-day EMA, which I like to see. And if we look at volatility, it's running up the line here and should be coming down to here. And the fact that volatility is still elevated, volatility still has strong seasonality, and volatility had a pretty significant bottoming tail, has to keep you a little worried here that maybe we're going to um, break down further here. Hence why I said a weak bull and one that tells me to have some cash on the side. And then the dollar is consolidating. It's clearly up off the bottoms. It's got some major moving averages, which will be resistance above. And just don't forget, it is way off its highs. So I say the dollar, it's kind of neutral here. That brings us back to the SPX. If we look at commodities, we saw that they were some of the leaders today. So expect strength. Gold, try to get above the 17. It was up today 2.25%. If we take a look at silver, silver is below the 50, and I just think based upon history in 2011, when silver has such a move and a climax top and a horrible breakdown, it doesn't immediately go back to new highs. So I certainly expect some sideways consolidation at best, or even a pullback further. Gold to me looks more attractive than silver. Oil, we haven't settled with Iran that I've seen. I see mixed reports in the news. And what's that going to do? I think that's going to raise the price of oil. So oil is holding up. Um, at some point, we're going to have to replace our strategic reserves, I would think. So it'd be interesting to see and look at oil seasonality is actually positive. So a little bit bullish on oil there, while natural gas continues to just putz around here well off the highs. If we look at the 10-year and then the 30-year, you could see why housing underperformed today. The 10-year was up 0.67. The 30-year was up, let's get that here, try that again, 0.49. I don't know if we can do a 5-minute chart on the 10-year. Let's see what happens. Uh, I guess we can. It's not too interpretable. Let's put it on a line chart and see if there's anything. All right, let's try a 15-minute chart. I'm just curious if we can see what the rates did around 2 p.m. today. 1240. Here's the 18, and you could see the rates bumped up here. Well, that says 11:15, so that was early. Yeah, I can't make the argument that I want to show you. I wonder. Nope, it's in the right time zone. Yeah, the 10-year and the 30-year. The obvious point is they they were higher today. That'll affect some parts of the market, and whether it was whether they were spooked by the Fed minutes or for some other reason. Um, and that's a 15-day. I don't really want a 15-day. Do I want a 1 day? Let's see how we can do that. Yeah, Praveen is an overachiever, and I thought that I just pulled that down to 1, which I did. And well, there we go. You can see the little bounce today. So it's still well off of where it was 2 weeks ago. And I think the weakness in the rates is good for the market, but maybe they got spooked a bit today by the Fed meeting. Buckets, I don't expect a signal, and I don't see one. There are very few stocks below the Bollinger Bands or above. Kind of depends what you're looking at. NASDAQ weaker than average. Russell looks pretty average to me, and the S&P 1500, the NYSE look pretty good. Stronger than average, but no signal. Market breadth, well, the NYSE continues to run just off of old highs. You had a nice recovery day on the NASDAQ, 2 in a row. So I wonder, and I was going to look, we reset the count for a follow-through day, and there's always discretion in what's determined the follow-through day. I was trying to figure if yesterday would count as a attempted rally day, and I'm going to think it does. It closed higher, and I would just leave it at that. And if you look at the NASDAQ, yeah, attempted rally day. Not up a lot, but after a hard sell. Then you have to wait to the fourth day. So that would be the earliest after a Tuesday would be Wednesday. So maybe you could have a follow-through day on Friday. Um, I was wondering today if maybe we didn't negate the prior rally date, and earlier we were up over 1.2, 1.3% on the NASDAQ, and I just wondered, but the sell-off cured the need to figure that one out. So strong days on the indexes. You know, stocks above the various moving average here, the 17, 20, 50, and 200 are not at their high point, but they're pretty strong on the NYSE, improving on the NASDAQ. Up, down volume, AD lines, new high, new lows, positive on the NYSE, and actually today positive as well on the NASDAQ. No new signals underneath, and we could see the 13-week new high, new low is creeping up to 0.84 and 0.49. No signals either way, so I think that looks pretty good. Um, it's consistent with the market slowly getting better. On the ratio charts, just to call out reality, materials, energy, staples weakened a bit today, industrials, real estate and utilities both weakened today as defensive things sold off. So you're really looking at materials, industrials, and energy. And they kind of go along with those data centers, so I'm kind of surprised that they sold off. But see, we'll skip that. If we look at some other indices, just you can do on your own time. I built out spiders, S&P 1500, NASDAQ, and the Russell, and I'm always looking at this green thing at the end of the day, 0.72, 0.83, 0.73, 0.49, and that makes me feel good. There's no bearish signal that this market has to correct or no bullish signal that it has to go higher. It's a neutral signal, which the markets can do what the markets want to do. I like to look at the sectors just to see what they're looking like. This was a ratio chart, sort of a way of looking at the relative strength versus the market. So I have ratio charts of each sector versus the spider. But then I like to look at a regular chart. And it includes the timing model, which is this line, and this being the WMA. This is a 50-day, and I believe that's the 100-day. You just have to look here. So you could see, actually, there's a 200-day somewhere as well. So let me say that again. Um, that is the 50-day in white. The yellow is the 30-period WMA. The purple is the 21-day EMA. And then you don't see a red one here, but if I crunch it up enough, you eventually will see a red one. That's the 200-day. You don't see it here because we're so far below, which by itself says something. So Bitcoin looks horrible. Another down day, hard for me to be enthralled by Bitcoin and its derivatives just right now. Here is technology. It's at a sell signal, really doing nothing, despite the strong day by NVIDIA today. Discretionary, also at a sell signal, pulled into the 200, which is where you expect it to bounce. But I wouldn't be buying it down here without some positive move. Here is communications. A one-time leader has sold off and is now below the moving averages with a sell signal. Industrials remain very strong, kind of consolidation after a big run. Financials had been doing well, and you could see they broke down pretty hard. We'll see if it can break above the 200. Sometimes what was support on the way up becomes resistance on the way down. Here's strength. This is energy. This is not a 2 or 3 day move. This broke out here, which is January 8th, but the buy signal came in as far back as December 30th. So energy has been hot, and along with industrials and materials, one of the big leaders here. Next one is materials, and you can see when you give it a little bit more time, pretty darn good. Broke above the moving averages back here on December 10th, has retested a couple of times, but continues to do great, look really strong. Real estate sold off today. A defensive play had been rallying of late. You'll see a similar pattern on utilities selling off today as the markets rotated more back into growth. Even Staples, which has had a great run, selling off today. And then I think finishing here with healthcare, which technically is at a buy signal, but really not doing much right now. All right, now let's go to my favorite tool, which is, well, actually not yet. Let's look at the mags, because today was a good day for the mag stocks. So that's a good sign if you're holding them. And look, I have, and the one that I report to you and show you my performance is my long-term portfolio, excuse me, is my short-term trading portfolio. In that portfolio, I don't care about tax implications. I do what's right based upon my signals. I have a long-term portfolio. That one I'm not in and out as much. It's by definition long-term. So Amazon, is it something to buy again? You had a doji reversal candle the next day, higher today. You're bottom fishing. It's not a technical buy signal, but maybe you can get in early looking at Amazon there. Apple broke down but recovered today into the moving average complex. Any higher tomorrow at a break above the 50, turn green on the buy sell, might be interesting. Google, boy, what a disappointment, breaking down after earnings when it held up originally okay. We'll see if it can rally from here. Tried today. Meta announcing a big CapEx spend with NVIDIA. I saw NVIDIA was up over 4% at one time. Meta, which popped on earnings and has sold off steadily, is today the day it bounced. We'll see if it can hold up tomorrow. You can have some optimism there. Netflix, I'm not sure I'm a believer yet. I think it was up today because Paramount has a couple of days that they can go out and kick the tires and make a better offer for Warner Brothers. And maybe there's some sentiment out there, excuse me, that Netflix won't get the deal and will actually strengthen because of that. Tesla, still in a downtrend. Get above the yellow line, at least it'll give you a buy signal. Get above the 50, I might be joining you. And then here's NVIDIA, which, it's a pretty broad spread, but I think it's interesting because it's not that far off the highs, and I think NVIDIA is waiting for earnings. And what we can see today is they had a nice positive day, finishing up 1. No, that's yesterday, 1.63%. but it was much higher. It finished at the bottom of the middle, not the top of the middle. Microsoft, gosh, I'd love to see this bounce. I think I certainly have some of my long-term accounts. We'll see. It's kind of had a nothing burger today. I don't know if it counts as a doji. I think the body's too big, but it certainly looks like an indecision narrow range bar to me. We have Labu Biotech. It just doesn't want to die. It's still in a sell signal, but a break above that yellow line, I might buy a new position in biotech. I like markets where biotech is part of the leadership. I think the next one is going to be pharma, and pharma looks a little different because pharma probably less subject to the most favored nation new drug policy, which seems to be targeting the next generation of drugs more so than the current. And you can see how strong pharma is. We have data centers, which had a sell-off today of such, down 2.38%. It's certainly done that before, and then it rallied. Some of the names that I actually bought some on weakness over the last week or so, Micron, SanDisk, and Seagate. And SanDisk announced that this massive secondary, because Western Digital, who spun them out, was getting rid of much, if not all, their shares. And I thought, oh, SanDisk is going to be down 10%. It's going to pull the rest of the complex down. Not so fast. They actually turned around. I think I was incredibly bullish of SanDisk. Defense turning back up, and we've been playing HWM. We've talked about that several times. There's a lot of good-looking ones, and we're back to Amazon. The JAS layout is where I make the bacon, and that's where I run a number of different ways of looking at leadership. Now, I want to go look at Crocs in Metastock. One of my followers asked me a question about Crocs and that he found it in Metastock. So the one nice thing that Metastock, well, not, there's a number of nice things that Metastock does, but one of the things that I like the most is that Metastock automatically puts in trend lines. So I don't, this is not the right Crocs. This is Crocs, but I think it's on a different exchange. So it's Croc. All right, let's go to the name. Contains CROC. One of the things about Crocs, here it is that, or about Metastock, is it has multiple different exchanges overseas. All right, so um, what do I like about this? And I do like stuff about it. I like the fact that this is a stock that has been beaten down quite a bit. You can see for how long it's below the 200-day moving average. It had a home run day. It had a EMS and a CPR, a gap, volume, breakout, momentum, a squeeze, a PSAR reversal, massive volume, massive relative strength versus the spider on the daily and the weekly. And just the only thing that lagged was their volume. How would I have traded this? Well, the high jump here is in the 60s, so it's not too high. So technically, I would have understood buying it after this date. I don't usually do much intraday. Now, the way I would have handled this thing and the way I handle it, and just because it's what I do doesn't mean it's the right way. I have a specific need that not everybody has. And that need is I can't be by my computers all day long. So if I can't be by my computers all day long, I have to have a way of trading that doesn't require me to be by my computer all day long. So I don't usually do my drawing here. Oh man. I think I would not be in the stock until it cleared the high of the day. When you have something that has been beaten up for quite some time, um, I like to let it break above the trend line or above the moving average. So you can see how far back, how weak the stock has been for a while, for a long time. It broke the 200 way back here in 24. It took 2 years to get here. It's not going to run again away from you right away. So I would have, I think that the trade that I would have taken would have been to to go long. I would have liked to have seen it pull back and retest and hold and then break out. But I don't have a problem entering a position on this breakout. Since I wouldn't have seen that breakout, I would have said it has to trade to me above the high of the day because my expectation is it's going to fail. No, I don't think it's going to fail, but I have to enter each trade with the expectation I could be wrong, and how am I going to manage the trade? I find it much more likely to succeed if it really comes back and retests and holds. But I don't have any trouble being in it. I would have not been in it till it took out the high of the gap up day. And, on something that you're buying because it's major league discounted, you don't want to sell an option against the one you're buying. So buying a call is probably the trade I would have taken, or buying the stock. And obviously with the call, you can hold a lot more. So for those wondering why I'm talking about Crocs, somebody asked me about it. And so here you can see the same thing. I just wanted to make sure that there was no trend line or something. I mean, is this a funny looking cup and a handle coming? I don't think so. It's too loosey-goosey to me. So I would have let this thing pull back, and maybe you're going to get one of these things. Let me start over there. Touch, pull down. I want to see a break above that. Maybe you'll get a flag and be able to buy it a little bit cheaper. Nothing wrong with it. Have no issue with it. Probably would not be in it yet, although I would be watching it closely because I like the setup. So just for those that haven't been here, I'm going to show you just a couple of the things that I like to do. I'm a top-down guy, so right now I'm mixed on the market, so I'm not going all in on anything. I might look at what moved today, and the leadership was communication, energy, and technology. I would then say, here's the industry groups from those three sectors. Let's rank them. Take the top 10, uranium, entertainment, solar, 4, 5. And then these are the stocks in those 10 groups from those three sectors. Let's rank them on up-down impulses. And I might just go through the top 10 and see if anything looks good. I think this is an integrated energy provider. You saw how strong exploration, development, production, marketing. Yep, I would call that integrated, formerly known as Encana. All right. Beautiful, beautiful move here, as are many oil players. Um, if I had to put a stop in it, might have to be as far down as here as 44.94 versus a price of 49. So I'd be taking more than a 8% stop. But this is in a nice run, good seasonality. Earnings are out in a week on the 23rd. And one thing to be concerned about, the high jump's at 100, and when the high jump gets to 100, the high jump has a tendency to reverse. So great day today. It might be the beginning of a big run, but I am concerned about the high jump. And let me make sure that earnings didn't come out today. And you got earnings coming out soon. GTE, Grand Tierra Energy. It's an interesting setup here. You got a little bit of a flag here, and I'd wait and see if it can come back up and take out that flag. But nice breakout, pullback. Don't know this company at all, and I'm not too interested in it. And the only reason it was up a lot and did much is because it's a cheapy stock. So one thing I like to do is come in here and put on a $5 and a $500,000 minimum. Hit OK. Now I only got a few less. And Perry on network below the 200 I usually pass. Northern Oil and Gas I looked at over the weekend. This one's breaking out cleanly, strong seasonality. That looks interesting. And so you can run the list yourself, and this is one way to put the wind behind your back on your trading and buy the things that the market likes right now instead of, just buy things because you like them. So that's top-down trading. Bottoms up is, let's be honest with each other. Bottoms up is where the fun is. It's when you look at the whole market and you try and pick yourself the best stocks. And I've got a couple of scans built in. My A plus does what I call the double momentum. This has been over and over the best move best signal I have. And we're looking for stocks to have two blue dots above where that yellow line is. They don't have to have the yellow line, but those two blue dots above it, which are a combination of the Kahuna and the force index filter with a filter. Um, Two in a row has been a super strong signal. We had it back here. Market ran up, but it's pulled back, but looks like it's getting ready to run. I like the signal. Let's go back here and see if there's any flaws. And there are, because you haven't crossed on the volume yet. Here we've broken out above the 200, Vavoom. We're coming out of a squeeze, extra good. Relative strength versus a spider is positive, as is OBV. And you might say, but Jeff, what's that high jump? It looks high, but it's only at 29. So I think ALC looks interesting. Floor is a contracting, probably involved in building some of those data centers. Pretty big cup breaking out to all-time or to recent highs here. Again, they all have the double momentum. ISSC, Innovative Solutions and Support, gave us a great area to buy from. We've now broken out. We're starting to run. You're not maxed on the high jumps, so you might look at that. And again, it's got the double momentums. Jack in the Box, I was just in California, and I won't eat him, and I don't want to buy him, but that's just my personal preference. When I when I grew up, we had a lot of Jack in the Box in Detroit, and I probably ate them all the time. So if I was looking at the stock, which is kind of an interesting setup here, I'd wait till it clears that line. TCMD, don't know them. Tactile Systems Energy was today an earnings day. Let's look. Whoops. Back to JS layout. Hit the earnings signal or the technicals. And where is it? Right here. And you could see earnings were out the 17th, which was after hours, I think, yesterday. 15% growth, small beat, 22% revenue growth, big beat. And, how do I think about earnings? Well, I mentioned before they're tough because Wall Street's going to look at, did they beat the projected earnings? Did they beat the projected revenue? Wall Street's going to want to hear going forward, did they beat the estimates for the future? And then did they expand margin? What are same-store sales? There's so many variables that matter. And if they miss on one, the stock pulls back. I'm a believer that most of the fundamentals are in the price, but it's that surprise column that gets me excited because the surprise is not priced in. And you could see that we had that double momentum signal right back here after the big gap up, and that would have been a great opportunity to buy. Well, guys, we got it again here. So those are some of the things that I like to look at. Just go back and see if I left any of those alone. And then TNL, Travel and Leisure Company Magazine, and probably Travel Agency. Nice uptrend. This is a shooting star candle, which is a no-buy candle. Suggests we're going to go lower. So the A plus requires you to be in an uptrend, to have those double blue bar dots above the squeeze area, and it wants to see favorable relative strength in OBV. Typically, I call my A trade pullbacks and uptrends with a breakout. So we've coded for that, and that's the A trade. And so If I had to pick my favorite stock of the night, and this one is not for the faint of heart, this is not by any means, this is not an easy stock to trade, but this is Bloom Energy. And Bloom Energy, from a fundamental perspective, if you're looking at revenue and earnings from here, is on fire. Alternative energy source for data centers. So this is going to be a 3 cent to 8 cents. So that's more than a double. So you're going to get a number in the change column of 200%. Revenues growing 20%, 57, 35. Multiple is gigantic. So some people that's going to block. But if you start to look out where Bloom Energy is going on earnings, it's darn impressive. So one of the things I like and I use frequently is market search. In fact, I used to let one of my friends use it because I didn't use it enough, but I really use it a lot, and no one else uses it, not, at least with my password. And I look at a couple things. One thing I like is to see where volume was, and volume was kind of average. Okay, and then I still using the legacy charts, and the stock that we were looking at is called Bloom Energy, and I'm going to type BE in there, and let's see what we can learn about Bloom Energy on this weekly chart. Nice little pullback. Now you got a little bit of a base stuck in here. You're right at the pivot. I like that. Your relative strength on the weekly is 99%. Look at some of these earnings for share growth. 514, 118, 267, 999. Stubbed its toes in December. It had a little bit of a sell-off. Projected 300%, 143, 162, and 41. I love big earnings, and boy, oh boy, does this stock have big earnings. So I think BE looks really interesting here. Let's go back to my scan and see if anything else pops up that looks interesting. BTSG, Bright Spring Healthcare Services. If I don't know what it does, I highlight it, and it's supposed to drop down and tell me. Home and community-based healthcare. Well, the hospitals are not the right place to go. I think this is a growth industry. The chart, a little bit of a base here. It looks like it's breaking out. It's not extended. I might watch that. CAPR is a cancer, well, it's a biotech. Look at sorry about my yawn. I didn't sleep much last night on the red eye. We can see here earnings does not make money, typical of many preclinical biotechs, which are relatively high risk. There's your floor again. HLF, Herbalife. One of my problems I talk about a lot that I wish I could fix is I can't always eliminate my mind. And this stock went through so many issues over the last 20 years. I have a hard time buying it. But boy, big uptrend, pulled all the way back here to that 21-day EMA, a move above the 17-day EMA tomorrow. This thing looks great here. I mentioned the biotech play today. It was funny because I was out to dinner last night in Orange County, and I was talking about who I believe that the CEO of Immunity Bio, his name is Patrick Shinshung, is in the same mold as Elon Musk when it comes to intellectual brilliance. And like many super smart people, after he's gone, he'll probably be remembered even better than he's thought of today. He launched a drug company called IBRX. Wall Street has not respected it. It's a cancer company. I was pretty excited by it. I have no inside information. I have played basketball on his full court replica of the LA Laker basketball court in workout room, which is like 5 stories below sea level in his compound in California. So I know him, but I have not talked about his company in a long time. But I thought it was way undervalued. I accumulated some shares, and today it was up 41.86%. That was kind of exciting. There's Jack in the box again. Technically, Wade pulled off back below the 200, broke out. Here's that the retesting multiple times. Break above this, the thing's going a lot higher. Maybe I should buy it and forget what it does. Pony, is this Pony? Paladine is a AI company. It's like a bunch of these that sort of live around here and pop every once in a while. TNL, Travel and Leisure, I just don't like where it closed here. And VG is at Vonage. No, Venture Global, it's an energy play. Below the 200, there's better looking ones. And one thing that we'll spend some time with on Sunday is I'm going to talk about why this new search is working so well. It's something we built during the last live meeting. It's become really my go-to if I have time to look at a lot of stocks. And I could filter this one very quickly and come in and let's take out anything that's not above the 200-day. And that'll bring us down. Oh, it's already built in. 242. Price and volume are there. Weekly bongo up. I think that's already part of the search. Oh, something didn't like that. Put that back on. Hmm. I certainly thought that the weekly bongo was there. Hold on one second. We scan all those to 36. Here it is. Well, the reason why I like this list is this is what a index would look like of this list. I have renamed this that we built on the last mentoring session. I now call it my rockets in flight. I would much rather fish from a pool that looks like this than fish from a pool that looks like this. Um, I think we've got a winning scan, and it's a one where I find some of the big stocks right now. So on that note, should be interesting end of the week. Next week is NVIDIA earnings, and about this time, everybody's going to start talking on TV that the market will do what NVIDIA does, and maybe it will. Um, I am long. I have raised cash. Um, I've got a bunch of profitable options positions that I'm going to let expire and and just cash out on Friday. I may cash some more out tomorrow. Um, this was an interesting 4 weeks. I had some disasters and I had some major wins. Net net, it's going to be a positive month. And on Sunday, maybe I'll review some of the wins and the losses and show you how I made some of those trades based upon the signals. Have a great day in the market. Be careful. A lot of people are calling for this market to collapse. And as much as I don't want to agree with them, I'm just going to end you with my biggest, one that I think is my biggest concern in the market right now. Why is this going up when the market's actually holding up pretty well? I think the VIX is telling me not all is well. Good night, everybody. Sign up for my meetings, the Metastock one, even if you can't go there so you can get the video. And come on Sunday, we'll spend some time looking at charts and looking at the program, answering any questions that you have. Thanks for your support.